Welcome to Real Newscasts, your bite-sized source for the latest in real estate news, featuring tech founder and CEO, Mark Weithorn. Let's dive into today's market.
Greetings, real estate enthusiasts. I'm Mark Weithorn, founder and CEO of DPI Showcase Websites, here to discuss the latest real estate news. Last podcast, we talked about foreclosures and how they're on the rise. Today, we're going to discuss foreclosures' evil twin sister, short sales. So let's review before we continue. According to Adam, short sales are surging 26% year over year. Completed foreclosures jumped 42%. Foreclosure starts rose 12% annually. The national rate, approximately 1 in every 3,388 housing units face a foreclosure filing. Where is it happening? The surge is not isolated, but is spreading across 77% of U.S. metropolitan markets. The states experiencing the highest concentration of foreclosure rates include Delaware, South Carolina, Florida, Indiana, and Illinois. In terms of share volume, Florida, Texas, and California lead the nation in new foreclosure starts. What is driving the increase? Unlike the 2008 crash, and we all remember that, which was triggered by predatory subprime mortgages, the current surge is fueled by general homeownership affordability challenges, hitting people who even secured low mortgage rates. The primary drivers are skyrocketing insurance and taxes. Homeowners are being squeezed by property insurance premiums. I know I live in Miami Beach and my insurance premiums are through the roof. It's unbearable, which have climbed nearly 70% over 5 years, alongside rising property taxes and HOA fees. And I know that here we have a lot of condos in South Florida, and they are all getting clobbered. Special assessment after special assessment after special assessment. The end of pandemic relief, federal pandemic era foreclosure bans, forbearance programs, and loss mitigation financial lifelines have completely wound down, letting backlog cases move through the court system. Short sales are making a noticeable comeback as growing slice of the distressed market. Because overall foreclosure activity is rising, short sales are naturally increasing alongside with them. However, real estate analysts emphasize that they're expanding from a baseline of nearly zero, making it a gradual normalization rather than a massive wave of defaults. So it's not like 2008 where it was a tidal wave. You know, the dam broke and it was crazy. Here it's slowly going up. The tide waters are slowly rising. So let's, for those of you who are unfamiliar with short sales, let's do a brief description on short sales. A real estate short sale is the sale of a home for a price that is lower than the remaining balance on the mortgage loan. Because the market value of the property has dropped below what is owed, the sale proceeds will fall short of paying off the lender in full. For the transaction to take place, the property owner's mortgage lender must formally agree to accept less money than they illegally owe and release the lien on the home so it can be transferred to a new buyer. Now, it may be called a short sale, but the timing on this is nothing short at all of the timing on this. How a short sale works. A short sale is a complex, multi-step process initiated by an underwater homeowner as a defense measure to avoid foreclosure. 1. Proving hardship. The homeowner cannot simply walk away because they made a poor investment. They must provide the lender with financial statements, tax returns, and a hardship letter proving that they can no longer afford the payments due to job loss, medical debt, divorce, or relocation. Finding a buyer. The owner lists the home on the open market, typically through a real estate agent experienced in doing short sales. A buyer submits an offer just like a traditional property for home sale. Lender review and approval. Unlike a standard sale where the seller decides to accept an offer, a short sale offer must be sent to the lender for approval. The lender conducts its own appraisal to ensure the offer matches current market value. This review process frequently takes several months to complete. Debt settlement. If approved, the bank accepts the proceeds from the buyer. Depending on the agreement, the bank will either forgive the remaining balance or require the seller to sign a note promising to pay back a portion of the shortfall. Damage control versus foreclosures. When a homeowner realizes they can no longer afford their property, they proactively pursue a short sale as a defensive financial maneuver to avoid a lender-forced foreclosure. So if you know that you're in trouble, this is going to be better than having the foreclosure process proceed. Credit score impact. For a short sale, it's moderate. Typically 50 to 150 point drop. Recovery is much faster. For a foreclosure, typically 200 to 300 points. That stains the credit report for 7 years. Future home buying. For a short sale, they can often qualify for a new mortgage within 2 to 3 years. With a foreclosure, frequently barred from conforming mortgages for 5 to 7 years. Deficiency balance. Lenders frequently agree to forgive the remaining balance or the remaining debt, whereas with a foreclosure, lenders routinely pursue frequency judgments, legally forcing the borrower to pay back a portion of the shortfall. So if you know this is happening, if something drastic happened in your life, like you lost a job, or medical conditions, or the insurance went up, or something drastic happened where you can no longer afford the property, it's better to be proactive and do a short sale and show the bank that you're doing something than to wait for a foreclosure when they evict you. Control of the process. The homeowner maintains a level of dignity by initiating the sale and moving on their own timeline. With a foreclosure, the lender legally seizes the home, evicts the occupants, and forces a public auction. Year-over-year macro of distressed activity mid-2025 to mid-2026. To understand where short sale numbers fit, the broader distressed property funnel over the past 12 months highlights a gradual normalization trend. Total foreclosure filings are up 14 to 18%. That's incredible. Foreclosure starts are up 12%, and these are national numbers. And completed foreclosures are up 42%. So here's the top 5 states with some numbers, the top 5 foreclosure and short sale states in the country. Number 1 is Florida. 1 in every 2,110 housing units are in foreclosure. The top counties are Hamilton, Charlotte, Henry, and Osceola. Number 2, South Carolina. 1 in every 2,287 units are in foreclosure. And the top counties are Kershaw, Union, Richland, and Greenwood. Number 3, Maryland. 1 in every 2,369 housing units. And the top counties are Baltimore City, Charles, Allegheny, Dorchester. Number 4 is Nevada. 1 in every 2,386 housing units. And the top counties are Lyon, Clark, Mineral, and Nye. And number 5 is Indiana. 1 in every 2,516 housing units. And the top counties are Lake, Grant, Vermilion, and Perry. So the bottom line is, foreclosures and short sales are on the rise. If you are an investor and you're looking to find homes that are below market value, now's the time to go and research this. Either go to a website that deals with foreclosures or find yourself a realtor who is familiar with the foreclosure and short sale process. It's complex and you need someone who's experienced with that. You can't be in a rush because the banks, they move very slow. They have no reason to move quickly. And if you do this, you will basically be able to find properties well below market value. Well, I hope this gives you some insight into the market conditions right now in the real estate market. And if you like this podcast, please like us, give us a thumbs up, and please share us so you can stay tuned for future podcasts. Once again, my name is Mark Weithorn. I'm with DPI Showcase Websites. My company creates websites for realtors across the United States and Canada. We've been doing this for 22 years. These websites are linked to the MLS, so it shows all the listings. It also has a built-in CRM client management system. We also have all the new and existing developments of the floor plans. We automatically blog for you, automatically post on Facebook and LinkedIn for you, automatically send out weekly email newsletters to all your clients. So this is like your own personal MLS. You want your clients searching here for real estate, not going to places like Zillow or Realtor.com. The cost is really simple. There's no setup or design fee, and it's $69 a month, which is paid monthly, and there's no contract. And that includes everything: the setup, the design, the IDX, the link to the MLS, the CRM, the posting on social media, everything. $69 a month, paid monthly, no yearly contract. If you're interested, please go to our website, www.dpishowcase.com. I want to thank you for your time and stay tuned for our next podcast.